All right, you guys, welcome. Doug McKay on the 26th of April, Thursday instead of Friday. Let's start out with this, looking at the still chart that we put up yesterday of the S&P 500 cash. This is a weekly chart, so the candles represent weeks. And we believe we're either looking at a 5-wave Elliott wave pattern to the upside or potentially a ABC corrective wave. It's going to be one of the two. Let's start out with the 5-wave first. This would be wave 1, corrective wave, wave 2, long. Most extended wave is always wave 3. Sideways and or fade wave, meaning down wave, 4, which actually could continue to carry out here. And then the 5th wave up. And the 5th wave in a perfect Elliott wave, 5th wave pattern or 5-wave pattern, if in fact this is the case, would be very similar to the length of wave 1, which would put us around 1500 on the S&P cash. Do I think at some point in 2012 we're going to see 1300? I do. I would almost lay any amount of money that we will see 1350. But that's not to say that we won't go higher first. So we're either looking at an ABC corrective wave and the ride is over and we never exceed these highs that we put in back in March, or we move out of this 4th wave up into a 5th wave, which again would take us much higher than where we're at. So having said that, now let's flip over to a daily chart. By the way, we have the overall trend in equity markets as long, meaning buy. Not all in yet, but anyway, we'll see what happens tomorrow. I think the futures are down about 5 right now with the downgrade of Spain. But I also believe GDP is out tomorrow, so we'll see how it plays out. This trend line here, downward sloping trend line, is still left over from the weekly chart, but if we wanted to tighten it up to a daily chart, this is what we're looking at. So we climbed above that yesterday. We also climbed above the 50-day moving average, and I believe today we got above the 30-day moving average, and we're basically at 1400 on the S&P. So we're either going to challenge, a couple things can happen. We're either going to stop and not get through the highs here of 1420, or we're going to kind of make a series of higher highs and higher lows, and we're going to chop sideways and eventually bust through that 1420. What do we want to see hold? What is our what if? Where would we exit if all things came apart now? I would say we'd be looking at the candle, the low. We would sit up on our seat around 1370, which was the low that was put in yesterday. And we would be very concerned if we took out this area here. And it's quite possible that this is going to hold. But as we mentioned last week, these lows that were put in here on 410 were never taken out intraday. But we don't want to sit around and wait for that to be taken out. If the trend is long, you get on it, and we'll see what happens as it plays out. Let's take a look at bonds. We'll go specifically to the IEF ETF, representing the 7 and 10 year, what we do each week. So normally, right, equities, risk on, you would see money coming out of treasuries, and risk off, money coming out of equities and into treasuries. But we're seeing both trends long in treasuries and equities. So we believe that one will fail and the other will continue to trend higher. Could this be a false move like it was here? Certainly. But it could also continue to play out if we look at it more clearly on a weekly chart. We could be looking at a nice basing pattern where this goes to new highs. Treasuries go to new highs. Rates go to press those lower lows. So I'll be watching this tomorrow. But it's worth mentioning that it is interesting at this time. We believe one is going to break and the other will take off. Let's take a look at gold. I put up a chart of gold, I think, today on the blog. We'll keep it on a weekly chart. The overall trend is down, but we're playing a bounce here in gold. And the reason for that, we have potentially an inverted head and shoulders, left shoulder, head, right shoulder, and we would move up our stop if we get up to about 168. So if this low holds today, which is we have a tight stop on it, we think that this could press up into resistance around 168 if it gets through 168, 174, which at that time we would have our stop moved up above entry, so we wouldn't have to worry about any exposure to losses. But as it stands right now, we're going to play this tight anyway. Let's go back to a daily chart on this. And this is not all in all of the managed accounts by any stretch as of today. But if we were to get stopped out here and then eventually it made its way back up to get through 162, we would get long again, because we think that would increase the odds that we'd be pressing 1700 on gold, which is around 166 on GLD. And that's it, you guys. There's some individual stocks that we're looking at coming out of basis. One of these is Visa. Let's take a look at Disney. Disney's not a bad looking stock. This was a still chart we put up today on a weekly basis, or maybe it was yesterday. No, it was today. In this channel, maybe it will press the top end of the channel and test the all-time highs. This would also be something like anything else that we're playing right now, where we would have a decent tight stop percentage-wise. So we'll finish up with the S&P. Again, we believe we're either looking at a 1, 2, 3, 4, 5 waves up, or we're looking at an A, B, C correction, and it's over. So we're keeping an eye on 1370, 1360 on the cash. We get above this 1420. We think that that's a breakout to the upside and the potential of a fifth wave completion. All right, you guys, that's it. Doug McKay on a Thursday, 4/26, and we'll see you next week. Thanks.